Okay, morning all. This is just a quick video or perhaps two videos to talk about how to calculate the profit on the disposal of a fixed asset in the cash flow statement question, the 60 mark one for leaving cert higher level. So just before I go into calculating it, I'm going to do two examples, but I want to show you that the question can be asked in two different ways ordinarily. So I've chosen two exam papers. One of them is 2014 and one of them is 2017. So taking the 2017 one first, we'll see that if you look at the extra information attached to it here, and if you look at number 2, it says new buildings were purchased during the year for 200,000. Buildings were sold during the year at a loss of 15,000. So in this particular question, they tell you what the loss on disposal of the buildings were, but they do not tell you how much you got when you sold the buildings, how much money you got when you sold them. They just tell you the loss. Okay? And that means if they tell you the loss, the 15,000, you can put that into the first reconciliation statement without having to do any calculations. There's no problem there. And then you need to do the calculation of how much you got for the buildings when you sold them or disposed of them in order to complete the cash flow statement. Now, in the 2014 question, it's similar. Everything is the same, except if we go to the part 2 there on the bottom, it says there were no purchases of machinery during the year. Machinery was disposed of for 30,000. Now, what that means is they've told us in this case what you sold the machinery for, or what you got for it when you sold it. That was 30,000 you got for it, but it doesn't say whether you made a profit or a loss or how much that profit or loss was. So in this case, you have to do calculations just like in the previous one, except what you're trying to find out is the profit or loss figure to go into the first reconciliation statement, and that 30,000 that you got for the machinery can go directly into the cash flow statement part of the question. Okay, so what I'd like to say is before I begin one of these is that where it's the same calculations regardless of which way they ask the question, regardless of whether they give you the profit or loss or not. It's just the very last part that might be slightly different. Okay, so I think I'll start with this 2014, since I have it right here in front of me, and maybe in the second video then I'll do the 2017. So I just move these around here so I can get my pen in my right hand. Okay, so give us a second. That's better. So I've done out just a little cost, depreciation, and net book value thing here. Okay, and I'm going to use that in a second. But first of all, I'm going to go to the balance sheets. Now, in this question, since we're looking for the profit or loss on the disposal of machinery, we'll be dealing with the machinery part of the two balance sheets. Now, in this, they go 2013, then 2012, which can sometimes be a little confusing. I like to put the earlier one first when I'm doing my calculations. So if we start with 2012 here, we see that the cost of machinery in 2012 was 495,000. So 495,000 cost. Okay, this was 2012. Okay, the depreciation on machinery at in 2012 or the end of 2012 was 250,000. 250,000. And excuse me, 250,000 I've written there. And then if we want to work out the net book value, we subtract the depreciation, the amount by which the cost has gone down or the asset has gone down in value from the first moment that you bought it. So 250,000 from 495 is 245,000 is the value of your machine at the end of 2012, or all your machinery. Okay, in 2013, then I'm just going to write it directly underneath it. Okay, again, we look at our cost, depreciation, and our net book value is just the 420 minus the 270 depreciation, give me the 150. So I'm just going to write that in over here. 420 is the cost, 270 is the depreciation, and 150 then net book value. So 420 minus 270 gives you this 150. Okay, so here's what happened then in part 2 down here, it says there were no purchases of machinery during the year. Machinery was disposed of for 30,000. So no purchases makes it reasonably straightforward. Now, if we want to find out the cost, the depreciation, and the net book value of the machine that we disposed of, I'm just going to write down disposed. So this disposed machine. Well, if we didn't purchase any machines and our cost value was 495 in 2012 and then 420 in 2013, then the cost of the machine that we got rid of must have been 495 minus 420, 75,000, because cost in balance sheets only really goes down when you get rid of an asset. Okay, so it's gone down by the amount of the asset that you've gotten rid of, because you can no longer have that 75,000 on your books if you don't own the asset any longer. Okay, so the next thing is your depreciation. Well, it says your depreciation went from 250 up to 270, and ordinarily that is the way that depreciation works, that it gets bigger and bigger. If you like, it's accumulated depreciation. It accumulates, it grows from year to year. So 250,000 is the amount that your machinery went down in value by, not in 2012, but in all of the years leading up to and including 2012. And then in 2013, if we were just reading this without any information, we'd assume that in 2013 it went down by 20,000, bringing my total from 250 up to 270. Now that's just from reading this. However, we have some additional information here. And it says depreciation charge for the year on machinery in arriving at the operating profit was 40,000. Now, this seems to indicate that the depreciation for the year was 20,000, but the question is telling us that the depreciation for the year was 40,000. So what happened here? Well, what actually happened is you had total depreciation for the year of 250,000, or accumulated depreciation up until 2012 of 250,000. You had depreciation for the year 2013, like we were told, of 40,000. So your depreciation, your accumulated depreciation at the end of 2013 should be 290,000. But something happened.